Let's talk about stock markets. Let's talk about being an investor, a trader. I think everybody and their grannies and their drivers are entering the equity market right now. So, probably a good topic to talk about. I'll give you like a few different chapters of my life where I have attempted trading and investing in different ways and what my learnings have been from that. So I got into the world of trading and investing very early. Started full-time trading at maybe the age of 17. This was around 2003, 2004, somewhere around that time. At the very beginning, when I got introduced to trading, I was doing it with a finite amount of capital that I had saved up from my other job, which was working in a call center. I would make maybe 8, 9,000 rupees a month, and I would save this money and invest and try to buy and sell equity. The problem when you're trading with such a small pool of capital, a lot of you, if you're in college, will face the same issue, is you will have to leverage and take margin to be able to make a reasonable amount of money. So I had the same issue. I would look at stocks which were in news and pretty much like you play roulette wheel, I would pick a number. In my case, that was the company and hope the price of the company did go up. I got very lucky initially. The stock markets, in many ways, are very kind to first time investors, and most people who just start off tend to make money. It's a psychological thing or whatever, but the lesser you know tends to work in your favor a lot of the time. So I bought this company called Marsoft. It was a tiny penny stock tech company at 4 rupees or something like that, and sold it for 20 rupees. And absolutely no reason why the stock should have gone up. It was just blind luck. But that was my foray into stock markets. And like many other people, I was hooked and addicted. And even if I were to lose money 20 times in the future, 20 times the amount of money I made on this one transaction, I knew for a fact that this is something that gives me a high and a industry and a profession that I would continue to be in for the rest of my life. So trading started like that, betting blindly and hoping a certain company does well. Marsoft was the number one company. This was followed by multiple bets on penny stocks, which did well between the ages of 17, 18, 19. This was largely how I used to trade. Along the way, I got introduced to a couple of books on fundamentally analyzing companies. I think some of the few good books I read at the beginning were maybe Benjamin Graham's book, a couple of like fundamental analysts, both onshore in India and Western peers. Uh, 3 years, 4 years of fundamentally analyzing stock got me to the realization that companies do not move based on how well they're doing fundamentally. Companies are a factor of sentiment and how many people perceive a company will go up or a certain stock will do well. Tends to move the company a lot more than technical factors or fundamental factors which might be supporting the company. Did this form of trading for a few years, followed it up by technical analysis. Technical analysis is the kind of trading where you look for patterns. Uh, Technical analysis is a very simple subject. It is bound by rules that what has happened in the past, patterns from the past will kind of repeat themselves in the future. So you look at charts, you look at patterns made on charts historically, then you attach a odd to that same pattern replicating in the future. Did this for a few years, was big on candlesticks for anybody who's interested out there. I think Steve Neeson has a couple of great books on candlesticks. It's a great way to foray into the world of technical analysis. You trade stuff like moving average crossovers. I remember I used to trade the 20-50 interval of moving average crossovers. What technical analysis does very well is it's a lagging indicator. So in a market which is trending or where there is substantial momentum, Technical analysis will help you ride the tide, so to say, and catch a large part of the momentum that might be in a market, especially if you were able to get in at a very early level when a trend is just beginning. Technical analysis happened for a few years, 3 or 4 years. This was followed by a quantitative phase, trading on correlation, mean regression, essentially betting that, say, for example, two stocks have a certain correlation between them historically, and if they digress from that relationship, you write an algorithm which will buy one and short the other, and you try to make that divergence whenever it were to occur. So in the quantitative phase, I would have traded on pair trading, delta hedging, many statistical arbitrage kind of transactions, which involve catching smaller pieces of a pie. Instead of buying something at 100 and hoping it goes to 120, you would enter a transaction where you hope to make 20 bips or 30 bips, but many times over. After quantitative came sentimental analysis. uh, you kind of like try and weigh in on the sentiment prevalent in the market. So I would attempt this by virtue of looking at what the promoters of a company are doing, looking at geopolitical issues, looking at interest rate cycles across the world, trying to figure out money will move in which direction essentially. Typically, when money starts flowing in one direction, especially smart money, by smart money, I mean the money which belongs to institutional investors and not retail per se. These guys don't act once and then change their direction. They would typically, once they buy something, they come in like 5 or 10 times later and add to their position. Did this for 3 4 years. None of these investment research methods kind of work for everybody, or they work in isolation. You need to read and check out each one of these, implement them, and see which one works uh, best for you, which one is best for your psyche, and then figure out a combination of two of them or three of them and implement them in your own investment cycles. At the end of the day, when uh, being a little bit candid here, when you have to figure out uh, how the economy is doing or how a certain stock might do in the future, it comes down to the psychology of it all. It comes down to how you are able to decipher what is happening at the back of the price of a certain asset class going up or down. And I think a combination of these four methods will put you in a position where you will be able to do that to a reasonable extent. India has a population of 130 crore people. Only about a few crore of that pay, they file income tax. Even smaller proportion has direct or indirect exposure to equity markets. I would put that number as maybe 1.5%, 2% of the country. That number is set to grow relative to Western developed economies where 50 60% of the population has exposure to equity markets. We are still in a very nascent stage here in India. And for any of you who choose to kind of take up this profession or work in fintech or broking or asset management, I think the scope is tremendous. uh, you will have plenty of potential to grow and scale in this industry over the next 10 or 20 years. So would definitely recommend more people attempting their hand at fintech and choosing this as a profession. I mean, so the two main things we do right now are broking and asset management. Broking under the brand name of Zerodha is something we started 11 years ago now. We were traders before we started Zerodha. The intention of starting Zerodha was to save cost. The incumbent broking peers of 11 years ago were very expensive. It was very hard for us as retail traders back then to remain profitable and kind of make a wage while paying 0.5% brokerage to your broker. So we kind of like decided, let's get a membership ourselves. We will not look upon this as a corporation, but as a community where it is run by traders for traders, and we will facilitate transacting at a cost which is maybe one tenth of what the incumbent peers of the day charged. So Zerodha has done very well in the last 11 years. We have grown laterally. We account for about 17-18% of all the volume that happens in the country today. I think the biggest differentiator between us and other companies in our sector is we have never really taken in external capital. It's a partnership between me and my brother, and we have never really taken on money to go out and promote the brand, which in turn will help us acquire clients. We've been organic about the process throughout. Uh, our ethos has been, let's build a better product, and word of mouth is the best marketing tool. And with a better product, more people will come in and use our platforms, and that has worked for us. True Beacon, on the other hand, is an asset management company. It's a hedge fund. It's a hedge fund which runs long short strategies on capital markets in India and manages money for select ultra HNIs across the country. We're trying to create a community of extremely influential investors, both from India and outside, whose money we manage. And in turn, we also hope to be able to help their holding companies by virtue of connecting them with each other.